The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, a couple days in a row now of risk-off type of trade action, lower trade action between Wednesday's action and now Thursday as well. Maybe not as heavy of losses on Thursday's trade, but still just felt like a lot of red across grains, livestock, outside markets, etc. We're nearing the end of the month of May with one more trading day ahead on Friday. Let's talk about what's happening in these markets across the board. Joining us for a conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to have you back on the show with us, sir. And I felt like I was stuck in a time warp, so to speak, between Wednesday and Thursday. Just felt like the same type of trade over again, 2 days in a row, kind of this broader risk-off sentiment kind of weighed into the ags throughout the day Thursday again.
Yeah, it is. And today was really painful because you had a good start to markets. When I say good start, positive price activity for producers on Monday night. Markets were closed Monday, and a poor finish on Tuesday. Then Wednesday was down. Then today we really broke some major moving averages and some support levels. And all of a sudden you got a head and shoulders formation on corn that points to lower and just very challenging. The backdrop of this, I believe, is that the expectation that, hey, corn planting, for all the trials and tribulations, the mindset all of a sudden is, well, it doesn't matter. Farmers are got a 24 row and this, bigger planters, and they're going to get it all in. Yeah, there's still some very saturated wet soil. So, no one never thought we wouldn't get 20% in, but you're going to get down to that last, whether it's 1, 2, 3, 4, 5, 6, 7%. We'll see what happens here, but really disappointing if you were looking for the market to find some support on the charts today, and came with the mindset, Jesse, that, hey, the last couple of days they're just pullbacks and corrections. Today was ugly. That's just no other way to put it.
Yeah. And I know, too, end of the month is upon us. So some of that fund money, those big money players can really move around a position in these markets, too. And I think that added in, I mean, corn open interest, I got to do some more digging on that. Maybe you could talk about that, too. But I think just some of the money move action to break it through some of those key support levels here really kind of added fuel to the fire, so to speak, and helped us kind of drive lower on Thursday, Brian.
Yeah, it didn't matter kind of which way you sort of look, Jesse. You couldn't claw out of negative news or concerns. And it's funny how the news kind of just shifts a little bit and it looks negative. But you've just got a lot of sort of stuff going on out there. And none of it really has a favorable tone to it from a perceptive perspective. That is, oh boy, planting progress is later, or, we're seeing demand pick up, or, we're seeing a men to relation. Chinese economy is now expected to grow at 5%. That was good news, but the market still is edgy on that. As soon as you get that good news, and then you get news, somewhere else that Argentina is going to export corn, and they're ready to go to China. So it's been a really tough last couple of days to really find, either positive news or perceptive positive news for the market to kind of grab hold of. And then you get this liquidation. I think a lot of traders, maybe small speculators, maybe funds, but they kind of went long on this thinking, okay, we've got just enough uncertainty that maybe we can finally get that gap filled in December corn around 502. Didn't happen. Maybe we can finally get this cattle market to push up to where cash prices were. Didn't happen this week. So just a kind of a rough post Memorial Day here. The last 3 sessions.
Yeah, and I know wheat has kind of been our leader, so to speak, on all the worries of weather concerns in southern Russia and the Black Sea, but now rain in the forecast there. So that's, leading to the wheat rally kind of falling back here. And you mentioned filling some gaps, and I know you mentioned corn. I believe like Novi beans, there was a gap up somewhere around the 1240 mark that didn't get filled. And now you look at where November beans are, we're 50 cents off filling that gap. So that seems pretty far away at this point here, Brian.
Yeah, and today is Thursday again, so we go back to Monday night, Tuesday. Get this beautiful pennant formation on the bean charts, in particular November. To your point, we got a gap we didn't quite fill. and you got this really nice, it's called a pennant. It's got a flagpole. You measure it upward, and had a pretty good looking, start to the week. And then the last couple of days, just kind of ugly. We're at the very low end of the flag right now. So that, I would say there's support there. But a close under the 21-day moving average, boy, that's something that we haven't done here since May 1st. So if you think about it, the average price in the last 20 days, we're now below. And that's telling you something. It's really just a reflection of good planting progress. No matter how you slice it, rain, lack of rain, whatever you want to, point to the weather. For those who just look at numbers, bean planting's ahead of the 5-year average. So how do you stir up a sort of an emotional, boy, that's getting concerning. And I think the bean market probably held up pretty well today relative to corn and wheat. The bean market, though, has some potential to really, I think, head lower if we talk about maybe shifting some wet acres to beans as well, and you're just adding more to the sort of the negative, and you're ready to break support. And then kind of you look long term. The International Grain Council, a lot of the analytical people are looking toward next year and talking even higher acres in more bean production out of Brazil. So you're looking at potentially 400 plus million carry out here in the U.S. and then looking at Brazil maybe at 100, close to 170 million metric tons. Remember, this last year they started out at 165 in their estimate. So yeah, well, it's a lot of good supply for the world, but not great for producers.
No. And I think too, I'll add one more piece to this puzzle. It's felt like this week it's been a lot of pressure in the outside markets too. Treasury yields going up. We're getting various data that is looking at inflation, of course, and all that's kind of a lot of that. I know PCE index will be out Friday. The Fed looks at that. I think some of that outside market noise as well here, getting to the end of the month, the end of the quarter, all kind of providing some added fuel to the pressure, the risk off trade really across the board, Brian.
Yeah, across the board is right. It's even, stock market down, just really tough go of it here as well. And so it's just, I don't know why the Dow has such a struggle. The S&P hasn't shown as much, but and maybe because more technology in the S&P, but even there, consumers sort of maybe pulling their wings back and saying, I don't know. If you've been following like the equities in the Dow, just for what it's worth, they peaked out back on April 1st and dropped from over 40,000 pretty quickly to the mid-April window to 37,500 on the Dow. Rallied back here to over 40,000, posted a second bearish key reversal on the 17th, and we've been down since. I think maybe people in the market said, we got our second chance to maybe lighten up or move aside. That might make sense to me.
Cattle market this week too. Tuesday was looking like here's a great start to the week, and then we flipped it on its head Wednesday. These concerns about ractopamine and that JBS plant in Colorado and China banning imports from there. That felt like the big news story that pushed us lower Wednesday, and then we kind of followed through on that to some degree. It felt like Thursday, Brian.
Well, it did. Now, it wasn't a train wreck today, anywhere from 32 to 80 lower in the session and come back off the lows pretty nicely. And the consumer still has they're willing to pay for beef, it looks like, but you're past the Memorial Day holiday. So there's that sort of psychological, let's call it, area. And then the second thing here is that when you kind of step back and look at, this flu is still a concern. Now, we saw where I believe another worker, don't quote me on this because I'm gathered a lot of information today, but I believe in Michigan, came up with the flu. So it's just pesky. It hangs around. No one really knows how serious this is or isn't. So where do we go? And it just the point I'm making here is it doesn't exude confidence in investors or people who want to buy this. If you're going to buy cattle at 184, you think it's going to 186 or 188. And if you don't have that confidence and it looks like it's stalled, that's going to be an issue. And that seems to be an issue this week.
Well, and to your point about the bird flu as well, you are right. That worker of Michigan testing positive, but of course, this since this outbreak happened, this bird flu's also added to volatility of the dairy markets. Really, here for weeks now, it's felt like. Brian, I mean, what's the latest as we're wrapping up the month of May in the dairy trade?
Well, we had this big surge earlier in the month in cheese prices, and whether the flu was the catalyst to that, we don't know, but it would make some sense that when you get times of uncertainty of what production might look like, or moving cows, moving heifers, crossing state lines, all of these things, I think you want bird in hand. So I think you had a big hard rush there, and it peaked out at a high price and a big strong rally, and then a big technical reversal on some of the contracts. And now it's come back to what I would call more reasonable levels, given our production, and probably where milk, from our perspective, maybe should have been priced. So June right now is around 1930, in that area, but it did get up to 2169. So the couple things learned there. One is, if you have wish orders, get them into the, wherever you sell, or in the futures market, because sometimes the market just goes up and grabs them, and then it goes away really fast. So that was kind of our message to our dairy producers: is you've got a big rally and a big percentage increase, and that's important.
Brian Doherty with Total Farm Marketing with us here today on Market Talk. Hogs as well. I just want to touch there. Hey, green on the screen in hogs on Thursday. So we saw a little bit of decent news on Thursday's trade action, but I know this hog market's been so beat up too, and I think it kind of goes hand in hand with the broader thought of demand and what's going on in the economy and more, and how that's all the cattle and hogs and everything else kind of tied together here in this window, Brian.
Yeah, as the world shrinks, it's easier to see the connections, right? And when
Yep.
something happens in Europe or the Middle East, and just all of this kind of uncertainty, I think what you've got kind of going right now is you've got the kind of the world trying to push and tug and pull between adequate to maybe a little bit more than adequate supplies at some point, versus what you really have is a growing demand market. You've got growing levels of demand worldwide. This isn't 20 or 30 years ago. You've got a lot of people that are living a better quality and standard of life. So you do have these better demand, but the production side and the technology and the ability to move inventory and move product worldwide has really advanced. And so the biggest technology, I think over the last decade, has not been anything necessarily profound, but it's really Brazil, and the ramp up in production, and in particular the safrinha corn. So you just have all this supply, at which at one angle you throw a little weather, it's not enough. Throw another angle at it, and it's just enough to keep things defensive in days like today, where the market can't find enough buyers.
Well, as we wrap it up, I purposely am saving some risk management thoughts here for last, Brian. And I'll let you take this whatever direction you want to go with it here, but kind of playing some defense as farmers are looking at things here, end of the month, and some of this pullback across the board. I mean, is it too late to make some moves? I would assume it's not too late to make
No,
some moves in
it's
terms of
not.
your risk management.
Not
So,
at all.
what do you
Not at
think
all.
about that?
Yeah, great question. So we spent March and April talking about December corn. If we could get back to 475, a little better than that, that's our pivot point. We're still there. We're at 471 today. Very disappointing when you come from almost 497 and peel off 25 cents here in the last couple of weeks. But the point of it is, you have to look at kind of the big picture, and you've got enough supply, that if and let's be real, there were a lot of farmers who felt they wouldn't make. All of a sudden, they got their corn planted. So there's good things here. There's a lot of good things for farmers. Just don't like the market reaction. But remember, big picture, we talked about 475 as a pivot point, potential low at $4. Maybe we can get to $5, 5.5, but it's going to take some weather there. So we're still in that ballpark to defend the next 70 cents down, which if carryouts in that 2.2 to 2.3, then that's probably a logical level to expect prices to go to. The March futures contract went under $4. So absolutely need to kind of think about that. Same thing with $12 soybeans. The reality is we've got more beans, more bean production in the world, and Brazil had another big crop. China isn't buying hand over fist. And in fact, our exports for the year ahead do not look very robust. So it's still defensive. It's now May 30th. It's not April 30th. It's not February 28th. It's May 30th. The crop is moving along.
Brian, good stuff as always. If folks want to reach out to you, have a conversation there at Total Farm Marketing and talk through their marketing strategy, I know a lot of great ways to get in touch with you and your team. How can they get a hold of you, Brian?
Yeah, the best way is just, Jesse, we'd appreciate a phone call, 800-334-9779. Make sure that you ask for an advisor. I'm Brian with a Y. Ask for me. Otherwise, email Brian with a Y at totalfarmmarketing.com. We have a great website too. You can look us up there. But we love to field those calls and be able to sort of hear what your question is and maybe what's underneath that, and kind of dig that out a little bit, and then provide maybe some solution that has some good value.
A lot of great folks on their team, totalfarmmarketing.com. Of course, Brian Doherty is one of them. And Brian, always enjoy the conversation. Thanks for being with us again here on the show this week, and have a great weekend. We'll talk to you next week, Brian.
Jesse, my pleasure. Thank you very much. And again, a little post here, but congratulations on your addition to your family. So good for you. And we'll continue to march on. Markets go up, they go down. We'll be here. We'll continue to take advantage of what it looks like and pass that along.
Well, thank you very much. I do appreciate it. The lack of sleep hasn't completely got me yet here, Brian, as per usual with a newborn. So, Brian Doherty there with Total Farm Marketing joining us here today on Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.